All right, go ahead.
This is Market Week Live for November 15th, 2024. Information and support for traders and investors. Welcome all the people that are in the room and everybody that is out there on YouTube, people that may be just watching the replay on this. Glad you're all here. This is just a little bit illegal that we have to do. This says that everything that we bring to you is for entertainment, educational purposes only. It is not investment or trading advice, and the sole purpose of everything that we do is to give you information so that you can possibly bring that to a person or an entity in discussion with investment advisors or to help you make your investment decisions. It's not a substitute for advice from an investment advisor. We want you to consult your own trading plan or financial professionals before making any investment or trading decisions. And if you need our legal, please go to askSlim.com. Our host today, the whole team of this amazing team of cycle analysts. I don't think there's anybody in the world that understands cycle analysis as well as the four of us. You can learn about us by going to askSlim.com, meet the team up at the top of the front page, and you can watch our interviews and tell you a lot about our history, who we are. So we encourage you to do that. Contact information, if you have membership issues or website issues that you see, please write to team at askSlim.com for anything on our content, information that we provide on education or analysis, or for first-time specials or upgrades, write to Matt at askSlim.com. Today in this show, I'm going to bring you my opening comments on the market. All the hosts are going to bring their own trade planning ideas, where each analyst shares a trading idea. You'll learn from our total approach to trading the markets and how we do our planning. Matt has a review of the askSlim services. You're going to see a fantastic offer that we have for all of our members, new, free, all members, as you're going to be able to get special on our cycle analysis workshop. Our express round will be coming up with the Q&A. All four of us will be able to answer questions. Level 1 to 4 members, you can add your question in the Q&A right now, and we will then be able to do that for about 15 minutes. If you have any questions on our services, trade planning, chart analysis, trading issues, personal issues around trading, any of those, you can certainly ask those questions. We'll do the best we can to help you with that. And I'm going to bring you my stock market analysis. We'll look at the SPY multiple time frame cycle analysis. And of course, what we have for you is simply astounding. How to watch the show? Well, premium members get a link and they can participate in the Q&A. So if you're a level 1 to 4 member, you're going to get that link. If you're not, please do become a level 1 to 4 member and you'll be able to participate. And free and non-members, you can watch this on YouTube on askSlim team channel. And we also post the replays on this there, and whatever other videos that we do, we post them there. And I think you'll have great access to lots of things that we do if you look in the playlists. If you're new, get acquainted by going to askSlim.com, go into free stuff and sign up for SIR Lite. You'll be getting information that Matt puts out every single day. Fantastic review of the S&P 500, and I think you will enjoy that absolutely for free. No credit card necessary. On YouTube, subscribe to our channel, click the notification bell, and like this video. Give it a thumbs up. On X, follow me at askSlim, and any questions, again, write to Matt at askSlim.com. All right, this is my opening commentary on the market for today, a market that, well, may be experiencing some sense of reality. The stock market did surge post-election. Before that ended, basically overnight, Sunday night, Monday morning, as the market had a little bit of a pop, but then it's been moving in a choppy fashion lower throughout the week, and now selling off very hard here on Friday. So last week, the market did get up to 6,000 on the S&P 500. Admittedly, early in the year, with the S&P 500 down in the low 5,000s, I said, well, there's some analysts out there talking about 6,000 on the S&P 500. That's absurd, pie in the sky. There's no way the market could get to that level of overvaluation. And certainly the market did what I did not expect. as it got there, and here we are. Of course, AI helped a lot. And then after the election, people celebrating what they thought were positive DJT policies that would help the market, and investors absolutely poured into stocks for a few days. Their the big fear, the big reason that they went in it, and why valuation doesn't matter, is because they see that momentum, and their only fear is missing out. Well, as AI goes up, the talk is we're in a new paradigm. I've seen plenty of new paradigms in my trading career, 50 years, of course, the Nifty 50 and the dot-coms, and we know what happened then. So it's as if they forget that something like AI can get commoditized, and that then, of course, kills those stocks that are essentially market leaders. So new paradigm in AI, no commoditization, forget that. It's going to happen at some point. And do Donald J. Trump's policies justify the market moving up the way it did? Well, deregulation is what's expected, which would mean more M&A. It would mean less costs because of less regulation, so that helps stocks. And tariffs, well, that'll help the domestic stocks because their competition will be less from the importers. And of course, lower taxes that they say are coming. All of those things bring that belief that you just ride that upside momentum. Not, they're going to miss it out. My belief is that Trump's policies are immensely disruptive, and they had to happen. Either the markets and the economy was going to come apart based on policies that were in place, or somebody was going to step in and make it happen. And I think his policies are very, very disruptive. U.S. government expenditures now 36% of GDP. Well, that's basically nearing socialism, if not democratic socialism. 36% of GDP is the size of the government. And of course, a $36 trillion debt with the potential for borrowing and the cost of borrowing to just overwhelm the private sector. And of course, now we have the new Doge. That's the team that is going to bring government efficiency, and that is Elon Musk and Vivek Ramaswamy, and they're about to take the axe to the government. That is almost certainly going to bring a domestic slowdown to the U.S. And add to that, world economies that are already slowing down. China probably going to need some immense stimulus because they're in recession. Germany came out and reported only 0.1% growth for the quarter. And tariffs. So their excitement about tariffs helping companies, well, it's going to kill a lot of companies. And if we look at history about tariffs and trade wars, you look back at Smoot-Hawley back in 1930, that really exacerbated the Great Depression because when there's high tariffs or a trade war, that shuts down trade and really hurts. Take a look at Apple. Apple, of course, made a big run. But the tariffs that are proposed are expected to add a price of $240 to the average iPhone. And if you see Apple going down today, that's why. Walmart hasn't even started to go down. Now, Walmart's products, they import 80% of the products that they sell from China. Yet that stock is at an all-time high. It's up 100% in the last 2 years. I think it's going to get smacked. And it hasn't even started yet. When investors realize that, they're going to go after some of those stocks. We got a question about Elon Musk. Will he cut his own throat? Of course, EV incentives, $7,500 and some other assortment of them, are corporate welfare. And I've always been against that. I couldn't imagine why the average taxpayer out there had to subsidize electronic vehicles, which are mainly bought by rich people anyway. Corporate welfare. If Elon Musk does things right, that will end. And how about the CHIPS Act? That's also corporate welfare, and they're likely to go after that one also. So things are likely to be very disrupted, and all of the excitement and bullishness around that, I think that's going to change. I've got some slides to show you here when we go back to the discussion about valuations. This, of course, is the Buffett indicator, and I'm bringing this to you from current market valuations. This is about a month old, believe it or not, before the Donald J. Trump rally, and you could see what they calculated in here as the valuation, 208% of GDP. That is absolutely mind-boggling. That's what I said at the beginning of the year. There's no way the market could get up this high because it couldn't possibly trade over 200% of GDP. Well, they proved me wrong for a couple of reasons, and it still is extremely significant. And ignoring this, well, that's not sensible to me. That's about 2.2%. That's at about 2.2 standard deviations. Here's again from current market valuations, where this is showing in here that the valuation up here up to 2.8%. They have an historical trend line here essentially representing fair value, which takes the data of this 75 years and essentially is a linear regression in here. And you can see it's way down over here. It's 67% above the long-term trend line. And you can see what happens is that when markets correct, like they did here in the 70s, and market correct as they did over here after the dot-com or the great financial crisis, they got down below fair value there. So it is at a very, very high valuation when you look at that. Nosebleed valuations is what I believe. And here you can see, again, a different way to look at that at the Buffett indicator. This is the internet bubble right over here at 2.1 standard deviations. You were pretty much the same way over here before the great inflation fight of the 1970s. You can see over here, this was the great financial crisis. It barely was over fair value and came way, way down over here to minus 1.5 standard deviations. And here we are, this absolutely insane excessive valuation for the stock market right now. And investors have been very complacent, figuring they can look way over the valleys no matter what. None of this really matters because AI is going to keep going, and the trade wars are going to help the economy. That's all bogus in my mind when you look at this. And one more thing here is the SOM rule, which essentially what the SOM rule does is it takes the 3-month moving average of unemployment and compares that to the 12-month low of unemployment. These are recession signals, as you can see here, and they're at 100% right there. So this, what that means is that anytime you have unemployment that has been coming down, and then all of a sudden it gets up by a 0.5% over the 3-month average, a 0.5% over, then you get essentially a recession like you did every one of these times right over here. And that happened here. So recession is out there. No matter what you see, no matter what the news says, no matter what you hear about soft landings and all of that, the probabilities of that are very small. And especially since the stock market is at, again, nosebleed levels. And when the stock market comes down, usually, well, you get interest rates coming down in a very significant way. And the reason why is because of the recession or prospects of recession. Love it or hate it, bulldozers are at the door of the US government and the economy. I think the bond market has it wrong. And that is, despite the caution you heard from Powell, who said he's in no hurry to cut rates, I think the what's about to happen is very significant regarding the cutting of the sides of the U.S. government that we're going to see there. Now, I know a lot of this stuff has to go through the government. A lot of people have to get, go through the advice and consent in the Senate before they're confirmed. There's a lot that's going to happen in these next few months regarding policies. But when you look at the potential of a lot of departments being cut out of the government, the size of the government is going to get cut very significantly. And that is going to bring a very likely slowdown in the markets. One more slide that I want to show you right in here. And that is, this is from Ryan Miller. Who's Ryan Miller? Well, he's my son and a great analyst in his own right. And he sent me this chart, which I thought was just fantastic to see. Also, what this looks at is the 10-year Treasury constant maturity. So in other words, it's like the continuous contract minus the 2-year treasury. And when it uninverts, in other words, we had an inversion, of course, in interest rates. And when there's a normalization, it comes when the markets believe the Fed will cut rates. Now, I know there's been a bounce in rates right now, but that doesn't negate the signal. Biggest rate cuts come when there is a recession and the stock market bear market. Here you go back all the way back here to the 1970s, and you can see each time it uninverted, a recession occurred. There, a little one, remember, but didn't last long because of all of the money pouring into the economy. And here is the next one right over here where it uninverted, and it uninverts because the Fed is on a rate cutting course, and it's on that course because the economy is, and things in the data are telling them that things are going to slow down. And I think they're going to be shocked by how things slow down based on the policies that are ahead of us. So thank you, Ryan, for sending me this great chart, which really gives you a good sense for this important signal and the likelihood of recession coming. Now, you note when these turn up, it could be a year before really the recession hits, but the market will be way out ahead of that, which it does tend to do. So I thought that was a very important slide to bring. And despite the bounce in yields that we see right now and the big upside spike in dollar, and all of that because they're afraid tariffs are going to bring inflation, I think the shakeups ahead is going to actually mean the economy coming down very quickly and tariffs actually being deflationary on their net value. I think that'll bring a reversal of everything that we're seeing now in the markets, and where the dollar turns weak, interest rates turn weak, and the stock market turns weak at the same time. That may come before DJT is even in office, or it may come after, and that would be when a lot of the policies are seen and people start to understand what's actually happening and how it actually is negative for the economy, negative for the stock market. I'm not sure on the timing on that. There's no way, and our indicators that we looked at have remained positive. And even with today's slide in the stock market here on Friday, November 15th, so far, those indicators still are looking positive, and all the structures of the cycle analysis that we do are all positive. So that doesn't mean that the decline we're seeing is starting to, the decline that I see out in the future is starting today. But there's a moment coming in time when investors are going to get it. And that will be that Wile E. Coyote moment when all of a sudden they realize that the valuations are crazy and that there is a very, very significant change going on in our country. And I think that'll be it, folks. I don't know exactly, like I said, when that's going to happen. The stock market will tell us. I'm not saying it's happening right now, that it's happening yet, but I think the stock market will clearly tell us when it does happen. So that's it. That's my opening comments for the market. This is trade planning with the askSlim team. From analysis to the trade idea, this is something that we do each time we do a live event where we all bring our own analysis, and we don't confer with each other on it. We do that independently from each other, so you can see how we each take this analysis that we do and use our own approach to it. And I think you're going to find it absolutely fascinating. So let me go first. I'll be the first one to bring the analysis as we look at Uber. So that's not Uber, that's TLT, which somebody asked me to bring, and I'll bring that in the Q&A. And let's take a look here at Uber stock. Now, one of the first things that I look at, and of course, when I look at the weekly and daily analysis, is the momentum indicators in here. And what I see looking at this is that not only the short-term indicators in this, when the market broke to the downside, have turned negative when you look at the slim ribbon right in here, but the slim ribbon PO is negative and about to give us a down arrow right over here, which will tell me that there's a short-term momentum resumption. With this cycle right over here, and I'm going to blow this up for you to see, that cycle right there configured in a negative way, where it started here and ended right over here. That tells me that there is pressure coming from the longer term cycles that would exist on the weekly chart that I'll show you. And you can see in here a positive cycle, each one bringing higher bottoms and higher peaks. And then here an island forming. That island reversal is very telling because this big upside gap right over here had buyers absolutely got to have it, got to get in it. And then this downside gap over here says, oops, maybe we made a mistake, and then selling comes in and momentum is lost. You see the slim ribbon colors these right over here, and you can have the slim ribbon for free. You can write our team at askSlim.com to get information on that. And so this is looking negative. It says to me that the next rally is likely to fail somewhere around the sell zone. So this is 76.89. If it got above the 61.8% at around 80.80, that would say to me there's something could be wrong with the trade. And then if it got over the 78.6 up here, which I don't have on there yet, that would tell me, well, this looks wrong. But in the meantime, it says to me that anywhere in this area here and getting up into the sell zone is the highest quality entry. And you see here, the weekly trough doesn't come out until March 25th. So I say this is an intermediate signal because with this negative right over here, momentum negative, you're likely to get a series of cycles out here that don't look particularly good. Here, when I look at the weekly chart, you can see the weekly cyclical patterns in here, which are very pretty, as you can see. And look at positive cycle here, positive cycle here, positive cycle here, and then making a new high. This is actually a megaphone that's being formed in there. And megaphones very often make tops. You can see this higher high right over here, and then you could see the megaphone shape right in here. And that generally is a topping pattern. Now, the momentum in here has turned negative, and when that does so with this reversal scout, a level 4 indicator, that says that there is downside pressure in here, that there are really sellers in the market. So that's why I believe looking at this daily chart, it's not likely to get past the sell zone right over here. That's 77, let's say 77, 78.80, and this is the first warning at around 80.80. Somewhere up in here, it's likely to get up and then sell off again. And that's looking like a good opportunity for the short side. And when you look here at everything I've said and that trough now coming out to March, there's probably a lot of chop coming here on this chart. And where you sell it here, it comes down and then tries to rally again somewhere up over here, but really doesn't really get until this is March, early to late March, before the ultimate low is in place. Uber, I don't like it. It looks bearish to me. It looks like a good selling opportunity. And that's what I have to say about that. And I'm going to turn this over to Katie.
Okay, let me share my screen. Let me know when you can see FCX.
Yep.
Okay, great. This is the weekly chart of Freeport-McMoRan, and this is a company in the basic material space with mining primarily in copper, but also some other metals as well. And on this chart, we have two sets of cycle brackets. The black cycle bracket is 21 bars in length, and it represents the average cycle length of Freeport-McMoRan. The red cycle bracket is 20 bars in length, and it represents the average cycle length of copper futures. So before I talk about this current cycle, I want to take a look at the prior cycle that formed its low right here back in August. Notice the peak of the cycle here, and very shortly after that, the shift to negative momentum with the reversal scout. Then notice the depth of the retracement down to just below the 78.6% fib of the move from there to there. So the depth of that retracement told us that the probabilities favored FCX not being able to take out this prior cycle high, and it didn't. This current cycle began, and we got to move up, a retest of the cycle low support, And then the reversal scout turned green to show positive momentum. FCX got up to the 78.6% fib retracement of this move, and that was the peak of the cycle. Reversal scout turned negative again, and now the retracement is down towards the 78.6% fib at about $42. We have a weekly cycle timing window coming up from November 25th to January 3rd. That's the area between these blue vertical dashed lines when we would expect this current cycle to form a trough and then begin to move up into the rising phase of the next cycle. So our initial price target for the time frame is that $42 level. If it just chops around in here, it's already been met. We got down just to $42 exactly this morning. If it wants to be weaker than that, our next level down would be this cycle low support at about $39. Now let's take a look over on the daily chart. Here we have an average daily cycle length of 33 bars. That's the black cycle brackets. The light red one is for copper futures again. And a couple of things to note here. The move up to the middle of this resistance zone in the rising phase of this cycle, then the failure and the break below the cycle low support. So this is a left-hand translation, meaning that the cycle peaked on the left side, leaving a long time for a decline because we aren't expecting this cycle to trough until this time frame out here again between these blue vertical dotted lines, which is from December 11th to December 19th. Now that time frame fits within the cycle timing window back on the weekly chart. So this cycle is considered to be in sync with the weekly cycle timing window, and daily cycles that are in sync have a high probability of showing weakness or possibly even breakdowns like this one as the short-term and intermediate-term synced troughs form. So we highlight those over on our cycle low timing tracker. Let me try to share that. We highlight those here in this box on the bottom right of the cycle low timing tracker. Now, FCX has been in this box since November 4th. And because of that, I've been watching for a possible breakdown. And sure enough, we got that earlier this week. So momentum is negative in the FCX with the reversal scout and the slim ribbon. Let me go back to the chart real quick. If I switch over to the area chart, you can also see another one of our tools, the option bias indicator, sitting at an N3 down here, and that suggests that we should consider a bearish bias in our options trades. So I recorded an options trade idea video today for this analysis in Freeport McMoran using Tasty Trade, and if you'd like to see that video, please consider becoming a level 3 or 4 askSlim member. And I'll turn it over to Matt or Arvi, whoever's going next.
All right, great. Thank you, Katie. Great job on that. Let's go ahead and hop over to a short idea in MCD, which looked a lot more attractive a few hours ago, but still looks pretty good. So this is our intermediate term and short-term cycle analysis for McDonald's. Let's pop over to the intermediate term time frame. So see a big peak that has in all likelihood fallen back here on 1021. And now this is looking nothing more than just a bear flag that is poised to have a deeper test lower into these levels here. You can see that there's a 38.2 right here at around 289. We are, we are right there. So 50 to the 61.8, reasonable. 281 to 272, a trough that is due somewhere around the end of this year into the very early part of next year. Rallies have a very high probability of failing as of right now. We shift over to the daily chart. Again, we were looking at this yesterday, holding up, but looked really poised for a sell. Obviously, we're seeing a move lower. This low is a slightly lower low than that old low. So the highest odds were in this rising mode would be to see a lower high form and for this to fail. You can see it failed right in this 38.2 to the 61.8 from 301 to 307 and is now getting sold. So at this point, you can see we have now gone sideways here in this range. We are poised for a breakout on the downside below this old swing low at 289.84, and we'd be looking for a move down here to this zone here from 281.60 to 275. I'm sorry, 275.76 actually, and a trough that is due 12.3 to right around 12.16. A high odds play in our view here for some follow through down into that low. So we'll be watching here closely for a little uptick and then watch for this to curl its way quickly back to the downside. And if this moves through this old high at 303.81, that would say that something has changed. Okay, so that's our look here at the short-term short idea in MCD. And I'm going to go ahead and hand this off to you, Matt.
Great work, Harvey. Great work, Slim and Katie as well. Okay, so I'm going to be reviewing ExxonMobil, a long, intermediate long side bias in that. Should see the weekly chart in Exxon.
Not yet. I'm still seeing my screen, at least on my end here.
All right, let me try that.
I see Exxon.
Are you? Okay.
Mhm.
All right. Hopefully the audience can see it. Okay, so we're looking at the weekly chart in ExxonMobil, and Exxon had been in a massive, it still is in a way, but in a massive consolidation for the past 2 years. If you look starting back over here, this is around January of 2023, all the way through October, November, or I should say September of this year, massive consolidation. And really that was coming off of a huge triple that the stock experienced from the COVID lows. As you can see here, where it traded around $35, $40 and then got up to about 120. And it consolidated then for almost 2 years. Now, something's changed in the last 2 cycles. So I'm looking at this cycle here, which just finished in September, October. And you can see that this cycle here in that rising phase, it actually broke out above that prior cycle high. So that was an indication of a shift in that cycle structure to positive. That was a confirmed breakout. And then we got a textbook pullback into the support zones around this minor cycle timing. And then we rallied again. We got up close to that 78.6, pulled back. And then in this new rising phase, as we set this new anchor low, we broke out again very firmly through, closed above that prior cycle peak. So the cycle structure right now in Exxon is positive, setting up an opportunity here in this intermediate time frame. Now, let's look at the momentum information as well, because this is an intermediate time frame outlook. So I'm going to pull over our momentum tracker. This is our Slimulator momentum tracker, and we use a set of proprietary momentum algorithms with a higher weight in this intermediate and longer term outlook period. And you can see right now that the overall conditions, the directional bias is very bullish. So there's a combination of this theme, bullish theme going on with the cycle structures, with the momentum conditions, and also the fact that we are still early in this rising phase here on the weekly cycle. Now I'm going to do a multiple time frame analysis here moving forward as we now look at the daily chart. So the daily chart had this breakout as well, new cycle, peak breakout. We pulled back into cycle low support, and now we're in this rising early peaking phase and consolidating between support and then that short-term 61.8 fib. So what do I want to see that would suggest to me that this trade is resuming on the upside? Because it's really important that you have the ability to see deep into the complete picture of the technical analysis. And we've been trained in multiple time frame analysis, and we use this proprietary grid that we've established. And what I'm focused on right here is going to be the 2 hour. I'll also talk about the 15-minute here, but then also getting back over to the daily. So first things first, you can see that over the last couple of days, even though we have this positive outlook right? We have a positive conditions happening in these longer conditions. You want to be paying attention to these shorter duration timeframes to help with that entry. And right now we have a negative 2-hour reversal scout, and we also have a neutral slim ribbon. And then I look at that slim ribbon on the 15-minute to help with that first domino, and that these dominoes have been negative or neutral on the 15-minute. They are neutral and negative on the 2-hour. So I want to see these dominoes start to turn, which will then let me know that there's a high probability that this near-term low is in place and that we could have a resumption. And so I'd be looking for that 2-hour reversal scout to turn back positive. And then also I'd like to see a close above the 61.8. That would suggest to me that the bulls have staked the claim and we're ready to push higher. If we can get through and make that happen in XOM, then we'll be looking at these projections that I have established here based on the swing high, swing low analysis, Fibonacci tools that we have. I'll just pull up this other chart here with those on there showing how I came about those levels. So there's 3 projections here. The first projection, the most conservative and the earliest one, which would be set in motion once we see those changes in momentum on those smaller duration timeframes and that close above that 61.8, that would tell me that this first projection from about 125.10 to 126.30 was in motion. And then if we could get a push above the 78.6, that would open up the door to these next projections. Now, this last one, this projection here of the 100% confluence could take a little bit more time, but the door is open to that and is active right now based on the overall conditions. So I use this swing low from the prior cycle or cycle low here to that anchor cycle peak back down to the cycle low that we experience here to give me one of the fib extension swings. Then also this recent swing high, swing low analysis here with the cycle low that formed, and then this early rising phase peak, and then this recent pullback into support. Those are what gave me these confluences that helped me with my projections on the upside, all supported by the overall structure, cycle timing, and momentum at this time. If we were to see a violation of around 116.05, which is slightly below that short-term 78.6, that would force me to reevaluate the overall projections. And if we were to violate the 78.6 on the weekly chart here, that would negate the overall bullish bias, and I'd have to step aside and reevaluate the whole picture altogether. So that's the overview in XOM. Back to you, Slim.
All right, fantastic work by the team. Just amazing how we all bring the analysis that we see and just follow the same format and a really very mechanical way to approach the market as far as this style of analysis. And you can learn that style of analysis because Matt is going to show you how in a moment. But I think it's important that I tell you what Douglas just said here in the chat. And it says it's more fun when Katie shares the trade idea on this show. Well, Katie's the best. So I wanted to share that out loud because Katie is so good at that. So thanks, Douglas. In case Katie didn't see that,
I did.
wanted
Thank
to.
you.
You did see that. Okay.
Yeah.
All right. That's great. She is great. All right. So Matt's going to show you how you could learn to do this style of analysis and more. Matt, I think we're going to go now into your piece right here.
All right. So you should see make sure that we can see our homepage.
Not yet. I'm still sharing.
RV, can you see the homepage?
No, I think we have
Nope, not
to stop Slim share.
All right.
Okay.
I'm going to stop my share, and there's the homepage.
Go ahead.
All right.
Yep.
Excellent. Okay. Well, if you're familiar with askSlim, you know what we offer. If you're not, I'm just going to take a very brief amount of time here and share with you that we offer several premium membership options at askSlim. We provide our subscribers with world-class technical analysis, innovative trade planning tools, and a comprehensive resource for various trading styles, including a separate service for day traders. So we have 4 premium levels plus the day trader service. And how this works is the higher you go in our memberships from level 1 up to level 4, with this, what happens is you get more extensive technical analysis coverage in terms of the amount of markets, stocks, ETFs, futures, as well as additional access to charts, custom indicators, and trade planning tools. So that's how that works, is you get more introductory information in that first level 1 with a deep focus on indexes, and then that broadens out into level 2. And then as you get into level 3 and level 4, you really get immersive with our innovative tools and custom charts and indicators. Well, today, as Slim mentioned, we do have a special offer. It is on Slim's Cycle Workshop. And this is something that we only do, we offer twice a year where the workshop goes on sale. But in November, it's more special because it comes with some exclusive bonus items. Before I dive into those details, let's talk about what you do receive with it. So with Slim's cycle analysis workshop, there are over 19 modules here, which I'm going to pull up here and give you a sense of what this looks like. Actually, going to go to the cycle analysis workshop right now off of my dashboard. Scroll down to that. Level 4 gets a lot of information. So the really convenient aspect of this workshop is it is online, and you have 24-hour access to it. There is no special software required, and you can watch and learn at your leisure. You can have an intensified approach. You can pause. You can really have a lot of freedom when it comes to learning at your own pace. So there are 19 core modules in here. There's over 20 hours of recorded video. It took Slim 6 months to write and over 2 years to produce. It is an amazing library of technical analysis. Yes, the focus, the core subject material is going to be cycle analysis, but this is truly a library of technical analysis that you're going to receive. And as time has gone on, we have added new videos to this. There are tools for tech videos that are included in here, which are fantastic. So if I go into, say, module 16 on swing high, swing low analysis, you'll notice that there's additional resources in here. So we've taken a lot of time to pull together the associated videos that work with the cycle analysis workshop. Furthermore, as the team has produced various webinars around the cycle workshop, we've added these in there. And now with Slim's new behind the curtain webinar, we've added a live webinar. We've added in some new addendums there where he steps through building a cycle analysis from a blank chart canvas. There's another one in here combining daily and intraday cycle information with momentum and price level analysis. So this is an extremely comprehensive workshop. Again, it is really a library of technical analysis that will change the way you look at charts forever, and will give you an opportunity to learn how to project in time and price and have a lot more confidence when you're doing your trade planning. So in terms of the details, again, the workshop is on sale now. It is $400 off, and you also receive a complimentary ticket to Slim's Behind the Cycle Analysis curtain. So that is a premium workshop. We usually have that opportunity to go live with Slim and you get the recorded video. That's about once every 2 months, but you will get, even if you participated before, you will still get a free complimentary ticket to the workshop. This is if you haven't bought this cycle analysis workshop yet. So if you do, you get that complimentary ticket. And if you're a level 4 member, you can write to me and you can get an additional $100 off. So that'd be a savings of $500. So this is a fantastic opportunity. Like we said, it only happens once a year where you do get the bonus materials to come with it. So take advantage of it while it's here. Anything else you'd like to add, Slim?
Slim, I think we have you on mute. There you go.
Thanks for letting me know that.
Yep.
You did an absolutely great job on that, Matt. I think that the only thing I want to say is that is just to put an exclamation point on what you said. about this broad library in there. I believe there are over 40 videos additionally to the workshop video.
Wow.
That are available there, you know, just like you showed in whatever teachings were associated with something I mentioned in there. Then I did those other. We brought in the other videos from my library, so it's just. I mean, people go through that sometimes 2-3 times and write me about how much they've learned. It's just incredible. So I don't know another way that anybody can learn as much about technical analysis, let alone cycle analysis, than in this workshop. So I really encourage people, take advantage of this. So if you save $400 or $500 if you're a level 4 member, become a level 4 member. I think it's just a great opportunity. So good job on that one.
All right, great.
All right, this is our Q&A. What we do is we open up the floor to our level 1 to 4 members to ask questions in the Q&A. And if you're not a level 1 to 4 member, please do become one, and then you'll be able to participate in this. We do it about every 2 weeks. And it's a great opportunity to ask questions about things that you are interested in. I have 2 symbols that I'm going to look at, and then I'm going to turn it over to the team. We had a request for TLT and NG natural gas. DJV, you asked a question about left-hand translations. I think you're going to get your answer when I look at the the charts in TLT in a moment and the stock market in just a few minutes. Gary Panisse is on there, and he asked a question about the island reversal and SPX, SPY, and that is going to show on the charts when I bring the stock market. So I wanted to clear up those questions in there. There's a question in there on the SIR from Ron. Ron, I'm going to encourage you to contact Matt directly, since he's the SIR master, with that question that you have, and then he'll be able to help you with that. So we just wanted to cover those few questions before we do get into the charts. All right, so I'm going to switch over and look at the, first I'll start out looking at the TLT chart. I don't want to have that yet, so let me just take that down. And we're going to leave Uber where I was before and look at TLT. So the question is there a left-hand translation, and what is the analysis in the bond market? Now, if you watch the beginning of the show, well, I talked about the fact that I think that interest rates are going to go down very significantly at some point. Now, right now, I think they're going to have a short-term bottom, but when you see this cycle over here and this big dominant cycle right over here, it says to me that the first rally up here may not make it. So in other words, you have a rally in the bond market, which takes you somewhere out into the beginning of the year, and then they come down again, and maybe you get a test of these levels right over there, or maybe even worse. If I blow up the TLT chart here and zoom out, you can see these big cycles right there and how good they are. So if you look at this low right over here, and you look at these 3 harmonic families right there, you can see how clear that is, the minor thirds that you see it right over here, and the first minor third, the second minor third, and what should be bringing a rally right over here. So DJV, who I know very well from the CBOE and has been a very good loyal member of ours, asked the question, is there a left-hand translation? I don't think so yet. I'll show you that. That would be on the daily chart. Look at the hammer that formed right over here. And we were looking for sink lows in early November. Now here we are mid-November and it didn't happen yet, but that's not really very far out of the norm. And it says to me that this level here is likely where there's going to be a rally. So full disclosure, I did buy bonds today thinking that we were going to be making a low. Now, here's what Danny, DJV, Danny, sorry I gave her name out there, is looking at right over here. The possibility of this rally being the whole rally and then failing and coming down again. It just doesn't make sense to me looking at that low that's due on the weekly and that hammer bottom, that this would be all we saw, a 2-day rally out of, all of this time period here. It makes much more sense to me that this cycle's running a little long, because this was an island right over here. At the same point, we had that hammer on the weekly, and this might be a little bit longer, a test of those levels that you see right over there. You can see it got down here today, and now it's getting a little bit of a bid right now. And of course, money flowed very significantly out of the bond market and into the stock market. And now I think we're in the very, very early stage of at least a short-term reversal of those flow of funds. Here is a very negative condition. Now, if you look, where did the slim ribbon turn negative? Here's where it turned neutral right over here. Here's where it turned negative after this gap down day. With all of this time left on the cycle, what did that say? It said it was likely to go down through all of this time. The slim ribbon and the slim ribbon PO giving downward resumption signals has been consistent in that. So on the short term, on this daily chart, that's been negative. On the intermediate term, here's where the reversal scalp turned over. That told me that this cycle right over here was likely to keep falling. And then early November is where we saw the synchronized troughs coming. And that, of course, right now we're 2 weeks into November, and that basically is the low and then a test of the low. So I think that we're going to get a rally up here into around 94 is what makes sense to me, with the potential to get up here around 95.5 for a trade into the beginning of the year. But then after that, we have this risk. Look, if you see here, the last minor third, that was a bad cycle that you can see right over there. Here is the last minor third from this low here, and that was a bad cycle, as you can see right over there. So there's a lot of risk here coming out into March, April before this is completed. But so right now I'm just looking at the, in a short term to intermediate term, a number of weeks right in here, which probably makes this cycle where it comes up, comes down, comes up one more time. I'm following the minor cycles before it then starts to come down again. So TLT, like I said, I was a buyer today. I think that there's a rebound coming. It's a short-term trade. Again, momentum is negative. The cycle patterns are not confirmed to have made a low. The structures are negative. Everything is negative. My position is my smallest unit position. That's how I enter. It's not a big play, and that's what it has to be when you're essentially going against the market and anticipating. So therefore, if I'm wrong, if DJV is right, this turns out to be a left-hand translation, it's not going to cost me a lot of money. If I'm right, I can add to the position somewhere out here if I want to do that, and then make it bigger. So that's a look at TLT, my analysis on that, and also some trading lessons as we look at that. Natural gas, take a look here at the natural gas market, and then I'm going to turn this over to the team. The harmonics in here are very, very pretty. And you can see in here, and again, you'll understand about market harmonics, essentially the music of the market, the heartbeat of the market, if you take the cycle analysis workshop. And here you can see that there's essentially the minor half right in here. And that's what it looks like here in the second minor half right there. Here's your first minor half and your second minor half. Look what happened when they were coming down together. 1, 2, 3 cycles coming down together. It had a hard downside hit. Look right over here. 1, 2, 3 cycles coming together. This is the intermediate term holders, the kind of, swing trade holders, the shorter term holders. They're all coming to where they're all going to liquidate together. Big sell-off, big sell-off. And then we're getting to this right over here. That's what we call the period of risk. There, yeah, you can get a little bit higher in here, it can play around, but then sometime out over here, probably December throughout over here through February, is where there is downside risk in the natural gas market. When I look at this, you can see this cycle in here. And again, on the daily chart, look at the cyclical rhythms. They're very identifiable. And it got up here after the negatively configured cycle right here, that it got up over here and then got into the resistance levels and then pulled back. You probably are going to chop around in here, and then this comes down over there into sometime into December. If this forms in a positive way, that gets you the next rally out into January, and then we get into that period of risk. So this is looking like I'm not thrilled about the way it looks. It could make a little bit more upside, but the risk rewards, in my opinion, favor the downside of the market. Those are the two symbols that I'm going to look at. Now I'm going to turn this over to the team so that they can then bring you their analysis in the stock market. So I'm going to turn this over to the team. And I see we already have a chart up there. Who's got it?
I'm going to talk about one of the stock market darlings, NVIDIA. We'll start with that one. I always like to start with the cycle brackets because I believe that that helps people who are trying to learn cycle analysis. I've got a 26 bar cycle here. We formed our low a little bit early, just before this cycle timing window began, and we have had a steady march to the upside. And we are getting towards the peaking phase of this cycle. We do have earnings, it looks like, coming up next week. So that'll be very important to watch. We do have positive momentum, a target zone up here that runs from 166.10 on the top to 152.16 on the bottom. We already got up last week almost to 150. This next cycle is not due to trough until March 30th of 2025. So it'll be very important to watch earnings and see how this behaves. Will it take it up or down? And as looking over at the daily chart, we have cycle brackets here that are 23 bars in length. We've got positive momentum. Both the reversal scout is green and the slim ribbon. We have gotten down into this support zone. So it's going to be very important to watch over the next few days and into earnings if this support zone can hold to take it back higher. If we get a break below, then I would throw the caution flag on this, and we'll have to wait and see how the rest of the cycle shapes up before moving out into the rising phase of this next cycle. But so far, everything looks quite bullish. Next one is XLRE. So this is the real estate sector ETF, and we've got cycles here that are average 27 bars in length. You can see how those have all shaped up. These vertical dotted lines show where the cycle troughs formed relative to the cycle brackets. So we are right here, and we may have formed our cycle low here, or we could be extending out a little bit. We do not have a confirmation of this yet. We like to see the reversal scout turn positive again to help us confirm an intermediate low. So we're still waiting for the next daily cycle to shape up, and I'll show you that in a minute. If we do have this cycle low in place, then here's the prior cycle peak. We would expect to be able to take that out based on this relatively shallow retracement down to not even quite the top of the support zone. And then we have intermediate 61.8% fib up here around 48.5. But again, we have to wait and see. And the reason that I have a little bit of caution about that is because notice here how this daily cycle is forming. It is not showing a strength that I would expect to see when we have a short-term and an intermediate term trough having formed. We would expect much more bullish price action, something like this, or not a stalling in the resistance zone with negative momentum. So with that in mind, this daily cycle is due to trough December 6th to December 16th. So that would take us out a bit here. We would need to probably lengthen these cycles a bit if we were to form a new low. But this could just be, chopping around, maybe a retest, and then up again. We'll just have to wait and see. But I would be cautious about getting too bullish in here. Next is going to be Eli Lilly. Someone asked how low that could get. We are inside the weekly cycle timing window. This is the last week of it. We've gone through all of these support levels, even the 78.6 so far this week. So getting down back to that cycle low support, that one's about 718. That would be a stopping point, perhaps. Let's take a look at the daily chart. Again, we still have negative momentum here, so I would wait to see the price action that you're expecting to see before getting long in here. Here is the daily cycle timing window. We are just 1 day past that. We've made a round trip here with this price action. That cycle low support is at 747.55. Could this have been the low and then up and then already a breakdown? Possibly, but I am more inclined to think that it is a late low forming and that we'll get some sort of a bounce here, and then we'll have to see how strong that is. But this is the level, 747.55, possibly down to 718-ish, to the person who asked how low I would expect this to go. Next, we're going to look at Marathon Digital Holdings. Let me zoom in here. These are cycles of 23 bars in length. We had a negatively configured cycle, but we've almost made it back up to that prior cycle peak, which is a lower probability occurrence, not out of the realm, but still lower probability. And now retracing back into this support zone. We have a weekly timing window coming up in early February to mid-March. So I want to see how we open next week, because if we gap down, then that puts this as an island. And I would be more inclined to think that that was the peak of the cycle. But, it has not violated any technical levels yet over on this chart, and we do still have positive momentum. Over here on the daily chart, we are in this timing window. So if this support zone right here can hold and we can get another upturn, that might be a good buying opportunity. We still do have positive momentum in here as well. So right now, depending on how this retracement plays out, we could have a buying opportunity. We'll just have to wait and see. And the last one I'm going to look at is MicroStrategy. Two scenarios in here. Was this the low and now we're moving up and going higher? Or this blue dotted line, is this the cycle and we're going to have a retracement that ends up coming out into the later part of the year? Momentum is positive. This would be, let's see, if this was the cycle, it only retraced to the 23.6% fib and went up. If the cycle retracement is yet to form, we could get a pullback down to about 276-ish. That would be the top of a support zone using this as the cycle. Over on the daily chart, we had a nice strong move, positive momentum. There's no weakness showing in here, which is almost why I'm inclined to think that we are in the beginning phases of the new weekly cycle. There's no weakness coming in here, so I've projected this as a bullish cycle. So you may get a pullback into this support zone. If it gets below that, then we are more of a possibility that the low is forming later. Right now, everything is bullish, so we would be watching for buying opportunities or possible breakdowns. This is a period of uncertainty with this particular symbol. So we'll wait and see. And I will turn it over to Arvi for his symbols.
All right, great. Let's go ahead and hop over. We'll look at the SMH, a name that has been a little bit weaker as we're seeing a lot of semis turn down quite meaningfully. Okay, so this is the SMH. Now you're not seeing a whole lot of weakness yet. That's because you have only a few names really holding up this group. And what's interesting about this is we now have a clear lower high versus that old high right there. So this is an area where we'll be watching whether or not it can move over. That's 266.5. If it can't, then you have a lower high that's in place, and this could easily move its way back to the downside with a trough that's due, you can see around Q1 or so of 2025, the later part of Q1 2025. On the downside, we have a zone from 231 to 224 or so, and we'll just have to see how this does. Jump over to the short term, and you have an obvious shift, right? You have a clear now lower low that is forming here, right there versus that low right there. I'm not sure why those arrows are kind of messed up right there. You can see that this old low is at 240.28, and we have now a lower low. So we'll be watching for this to have only weak upticks here, and then for this to curl its way back down. Very good odds of a move down to that 234 area. You can see that there's a trough that is due 12.2 to right on 12.12. And if you draw on your fibs from that key low back here to the high, there is a 61.8 around 224. So, these are the areas down about 234, and there is a 50, sorry, at 231.40, a 61.8 at 224. To me, this feels like a high odds play to the short side if it tried higher. And this is really poised for a move down, as we've highlighted. In terms of our levels up, they are falling, but currently it's 248 to right around 253 or so here in the SMH. We'll be watching for this for a short setup for level 3 and 4 members. And let's go ahead and hop over to the XBI, which is just an absolutely epic meltdown that we have seen here on the weekly. One of the solid setups to close last week. You can see a really clear base that had formed, was poised for move up, closed the week at highs, and then got absolutely smoked on the downside here. There is still a trough that is due, no low that has formed. Is it possible that this is that low and you have now a left-hand translation? It's possible, but we have to still give this further time for clarity. On the short term, there's a low here that is due right about now. Very, very sharp on the downside. So just have to watch to see where, how this acts, but we would be watching for a low to form. But again, there are absolutely no signs of it whatsoever here in the XBI, with just a very sharp sell from 105 to 92 in a very short time period. And I'm going to go ahead and hand this off to you, Slim.
All right, that's absolutely great. One thing I want to say about this XBI is that slaughter that you see there is actually coming because of RFK Jr.
Right.
being in the role that he was appointed. So just important to say that. And when you look at that coming to what could be the trough, both in the weekly and the daily, at least I would expect a rebound to come there. So
Right.
that's, I think, a good look at how you could anticipate a bottom, but with an extremely small position, just forgetting potential rebound in there. So great work to the team. I missed one question in here that I should have looked at, because early on, Roger asked about gold, and I'm going to look at that really quickly so that I don't skip that out, especially since the patterns have been so absolutely fantastic. You can see in here that what we were expecting was this corrective period right in here, with a trough coming between these two time frames right there, and you can see this came exactly as expected. Now with the reversal Scott rolling over, I'm actually looking for a rebound only into the resistance zones, 2645 to 2700, and then let's see what happens. We don't have any sign of the bottom occurring in there yet. When I look at the daily chart, you can see, again, there's synchronicity between where this low should come and where the weekly, and now we're about to get into this rising phase. My assumption is, again, that we're going to get a bottoming in here and then move up. But as you can see, look at the slim ribbon PO giving you all of those bullish signals in here. Fantastic. It turns neutral and now is red. So you have to be very cautious and really tread carefully as you potentially buy for a rebound here in the gold market. So I wanted to cover that one before we got into the other charts. So that's it. That's it for our Q&A. I think, fantastic work by our team, and we're going to move on. All right, stock market analysis and projections, important information. Please do read this slide. It tells you about our approach to analysis and the important aspect of trade ownership. No matter what we say, no matter what anybody says, you have to own your own trades. You have to decide when to get in and when you're going to get out and not wait for anybody to tell you. And I promise you that will go a long way in improving your overall results. Once again, a reminder, we're running our cycle analysis workshop special right now. You can read this slide, go back and watch the really great presentation that Matt did earlier in the show about this cycle analysis workshop. You know, save $400 right now, only $897. If you're a level 4 member, write to Matt and he's going to give you an extra $100 off, and only $797. And if you want to upgrade to level 4 so that you can get this special discount, then let Matt know that also. And also you will get the bonus of being able to attend my next Behind the Cycle Analysis Curtain, where I go over all 24 symbols, 48 to 50 charts on the futures, and teach what I'm doing all through that. So it's a phenomenal opportunity. So please do take advantage of that. Stock market multiple time frame analysis and projections, SPY, weekly, daily, and intraday with our proprietary indicators. And I'm going to start now, before I get into that, looking at our market condition monitor. So what has happened in here? So as the market moves down, on the MCM, our near term, which essentially is, you know, traders that are going to be holding for just a matter of days, swing traders, those type of people, those look like the have turned negative here today. So for the very, very, not day traders, but short-term swing traders, conditions have turned negative based on our algorithms that you see there. Now, for the short term, in other words, if you're like a trader of a few weeks at the most, maybe out to 8 weeks, things have neutralized in here starting yesterday. So things were very bullish and now they're going neutral, as what's happening is that the shorter term, as we call it, the domino, begins to tip over the other longer term inputs to these algorithms. And you can see in here as the short term starts to turn negative right over here, and that tips this over to neutral. So that is telling us things are changing, but not really negative yet. The market is selling off hard here on Friday, but it's doing that while the longer term inputs are still bullish, as you can see here as I switch over to intermediate. And all of these are still bullish. And when we look at the charts, you'll be able to see on the weekly chart that they're still really in very good shape. This intermediate takes monthly, weekly, and daily inputs, puts that in there, and then throws out the conditions. The absolute, when we, of our things that we look at, the intermediate is the absolute dominant. The short term is the next dominant. The near term is next, as you can see, and then the intraday right over here, which only our level 4 members get to be able to look at that, and they can see the conditions. So the intraday, as you can see in here, were very bearish to very bearish, except for the Dow. So right now we're looking at a deteriorating situation that actually is not yet bearish, but showing us that there is some weakness in there. So when you use the XBI, some things will turn slowly when you look at the longer term. It's the shorter terms that are really going to give you the idea when these things are changing. So it's important that you look at the multiple time frames. This is in the trader mode, and you can also look at it in time frames mode, as you have right over here. And this is looking at the 2 hour. If I looked at the daily, you could see right over there what these conditions are right there. So we're going to look at the trader mode right there. And that is what I wanted to show you on the market condition monitor. Remember, level 3 and 4 members get this application. So now we're going to switch over. We'll leave the gold chart right over there, and we're going to go into the stock market. So Gary Panisse, another CBOE friend of mine, asked the question, is there an island reversal? And there absolutely is an island reversal that you can see right there. I'm just going to go back over here so that you can see where those cycles, how the cycles are formed. These daily cycles have been fantastic. Now, you know that I have been looking for a period of risk or corrective period. The daily cycles have kept us from believing that was happening yet. And we have cautioned about that for people that are shorting the market, that the indicators have been positive, the cycle structures have been positive. That's no time to be getting short the market in any kind of a significant way. The smallest positions are fine, you know, if you're trading the market, but not in any kind of a significant way. And you can see here as we look at the corrective periods right here, this one was barely a downtick. As a matter of fact, it formed a rectangle. I teach about this in the cycle workshop, how these form right over here. That's because the upside pressure from the weekly was so strong that this downside pressure from the daily couldn't get this to come down very much. And it just forms a rectangle. It could be a pennant, it could be a triangle, could be lots of formations that, you know, flags that, you know, give you bullish formations. And when you get into the next cycle is when they move up. That's why these formations have a high probability of coming out of the pattern the same way they came in this case, the upside. So this was your corrective period, corrective period, corrective period. This was your island bottom right over here, an abandoned baby, as you can see, and that made that bottom. Now you have the island reversal right over here, that top right there, as people were just absolutely choking at the door to get in here. Make sure you don't miss that upside move. And now they're just absolutely bailing in here to get out. It leaves the island. What that means is that the pricing right over here is extreme, just as the pricing right over here was extreme on the downside. And this very likely is an important topping area right in here between the monthly fib extension right there and the daily 61.8 right there, daily 138 right there. This was an important area and it did fail from there. Now what we have is the conditions of the slim ribbon still positive. Look down over here, the option bias indicator still positive. These things have to turn for us to get the indication that something very significant is happening in the stock market. When I look at stock market momentum on the daily chart, you can see that this is still green right in here and positive, and the slim ribbon is turning over. The slim ribbon PO on the bottom right over here is still green, and it very well could give you an upside tick here. If it starts to chop around on the bottom over here and it turns purple, you'll know that there's a negative effect going on from the longer term weekly chart that is not allowing it to get any kind of a significant rebound. That would be a warning. Here is your weekly, here's your intraday, I'm sorry, here, the 2-hour charts. And you can see the declining phase. This is your daily cycle that I have overlaid on this chart right over here. And you can see how it follows on this 2-hour right there. There was a little head and shoulders right there that gave you the measurement to come down to this area, which it easily did. And then you had this declining phase in the daily chart, and then you got into the rising phase on the daily chart. But here's that big island right there. And now look here at the 2-hour slim ribbon. It has turned negative right there, and the slim ribbon PO is negative. It's red right over here. So this is that first dominant right there, domino that is starting to tip over, and we will be looking to see whether or not that is what brings us the significant top in this market. Now, let's go back to the discussion of this daily chart and of the period of risk on the weekly chart that we were looking for a correction. That did not happen. All we got was a 3% decline in the period right in here where we thought would be steeper to as much as 6% to these weekly supports. I want to go over to the Russell chart right over here. And on for our members, and I sent you the notice on this, I have overlaid the Russell, a potential cycle in the Russell. Now you see where this bottom came here, and this bottom right over here lines up pretty similar to this bottom here. You can see these are the Russell troughs that I put in here. And that shows you this green cycle right there, which is out of phase with our original longer cycle. This decline right over here in the S&P 500 was over 6%. I might have gotten that wrong, and this timing might actually be where it is. And right now, yes, I'm second guessing myself, but this is how we learn how to project in a way to get what didn't work out to be more correct. So when I put this in the Russell, it said to me there's a potential that this was that correction and this is the rally, and that this is actually where the next correction is going to come out here. I don't know that yet. Look at how much the Russell's giving up. The Russell's down now on the week like 3.5%, 4%, and that's because interest rates are going up. Now, I don't think interest rates are going to go up anymore. So the Russell could get a bounce in here, and this is very well configured, very bullish with a positive momentum here on the Russell. So now I want to switch this over to SPY, where I have that same cycle overlaid right over here. And you can see the formation of that cycle here. And is it possible that the 6% decline that I was looking for happened over here along with that Russell decline? Well, if it did, I missed it. And sometimes this gets confusing, and sometimes around events, like when you're coming to election, things can happen in a very strange way. Either we're in the rising phase here with the Russell that actually began over here and it's already 10 weeks old, or it's coming here after a significant decline. I can't know that right now. And you can see the potential of this being the uptrend or this being the uptrend right over here. What we are looking at is the potential for the daily pattern that we're in right now, helping us a little bit, because this is where we saw this cycle bottoming. And this cycle right over here is the one that points out to early December that we've been talking about. This correction right over here could take you down and form in a way that's positive and then get you another rally. Or if it starts breaking supports in here as the momentum turns negative, then there's a potential that that actually turns into a pretty severe decline in here that gets you down somewhere around, well, 550 on the S&P 500 or worse. How will we really know that? Well, let's just look at these important retracement levels right over here. If the market, it's getting down to giving up 50% of it right there. So I'm just going to zoom in right there. If it gives up, under the 61.8, that is 580 on the S&P 500. That'll be our first warning that the market has had a peak. If it gets down under this level right over here, which is the level at the 78.6, that's 574.70. That would be a very significant number and tell us the market actually might be in a lot of trouble. And then, of course, there's the cycle low support at 568.44 under there, and the market has peaked. Absolutely. So that's these are the important levels right there: 580, 570, 480, and then 568.44 on the downside. This island says that there is a lot of time for the market to fall and not likely be able to get much going on the upside anymore. The background news, I don't think, is going to be very good for the market, and I think it has seen the best of it right now, as I said in the beginning of the show. If you did not watch my opening monologue, I think it's very important for you to do that. So we're getting into the period now where the market will begin to tell us about the conditions. Again, the OBI still positive, the weekly chart still in positive momentum, the momentum on the daily still positive, but the first domino tips over right over here after coming out of the island and the intraday turning negative. That says to me that we have to watch these important numbers as this market moves sharply to the downside here today on Friday, November 15th. That is my analysis on the stock market. If you want to get that market condition monitor, please do become a level 3 or level 4 member. And don't forget about investing in our cycle analysis workshop so you can learn how to do the chart analysis that we do all the time. If you're new, well, you could start learning from this team of pros by just looking around at our education and analysis for traders, investors, by going to askSlim.com. Our new front page, our new website in there has got a lot of information for you to see. And of course, you can write to Matt for anything that we have presented today that you may need information on. So that is it, team. I think we did an unbelievable job. Kudos to everybody.
Absolutely. Extremely comprehensive as usual. Great interaction with members, great questions, very thorough.
Thank you guys so much. We will see you in 2 weeks, right?
2 weeks. Yep.
All right. Have a
right.
great weekend, everybody.
All right. Thanks.
Bye-bye.
That's it.